Hey YouTube, live chat. Watch that chat. I'm doing some scans. Now, why is... God, that's annoying. It won't show up. I don't know why that is. We're live. I'm doing some scans, but I am not finding anything that crossed up. Costco. Oh, let me bring up Costco earnings. Do I have that? Yeah, I've got that on my notes. There's nothing in my holdings that crossed up. Look at my watch list. Lee. Wow, Lee Auto. Scans, Lee. That's an ugly chart. Boy, that's an ugly chart. Okay, I've got a chat window set up, so if you guys are here. Zephan. So Zephan, here's what happened yesterday. I'm exhausted. The Rose Bowl didn't have air conditioning in our storage container. So we're stuck outside in the Rose Bowl, and it'll be happen again today. It's not going to be fun. So yeah, I'm exhausted. Let's look at the ARC holdings. Let's see if anything crossed up on the ARC holdings. It's going to be hard to find something. Market's down. By the way, Zephan, I hope you, like several of the other people who messaged me yesterday, purchased a bunch of the inverse stuff. And you can hear me, right, Zephan? I think I'm on the internal mic. I can see your chat. So if you can hear me, just hit up a yes. And it's good to see you, man. Oh, I'm exhausted. And I've got people messaging me, where are we going to breakfast? Where are we going to breakfast? I haven't even thought about breakfast. There's nothing crossing up on ARC. I'm going to stop that scan. I'm going to get moving here. Let's look at the NASDAQ 100. Because I don't think the S&P 100 is going to have anything. There's the NASDAQ 100. Let's scan for that. And God, my internet here is so slow. Head is going to get shaved, I think, soon. I don't know why I have to go back here and look. I do, in fact, you just remind me, Zephan. I might make some coffee here before I go shower. But I drink decaf. It's not like I'm off alcohol, I'm off caffeine, I'm off a lot of stuff, but not sugar. Not sugar whatsoever. Okay, nothing in the NASDAQ 100 that crossed up. Is there any chance in the world the S&P has 100? Let's see, S&P 100. And today is Friday. Oh yeah, let me make sure I say that. It's Friday. Careful holding. Through the weekend, nothing in the S&P 500. Zephan, man, you get to my age and you realize caffeine and all that stuff takes a toll on your body. Let's see. Hey, Zephan, did you listen to the podcast? I think the podcast sounds horrible, but it's the content, not necessarily the recording stuff. That's why I keep telling Rick. Hey, great buy. Listen, reality is, I think I'm going to go over it. Goldman Sachs expects the year-end target of 3,600. That's another 4% down. You can't time it. So, yeah. At 100, man, Google, 5 years from now. Uh, I listen and I'll give this as a YouTube exclusive, since it's probably Zephan and maybe 20 other people that listen, but I'll mention it. I'm going to mention that. YouTube exclusive. Try and get more people over here on YouTube. But I was listening to My First Millions podcast, and September of last year, they had a list of 10, I think it was 10 pre public tech firms. The reality of the situation was uh, Sam's wife, Sarah, she's a self-made millionaire, I think, before she's 30. And one of the ways they talk about, okay, how do you become a millionaire? What are the ways that you can do this? And Sarah's way she did it was she worked at a bunch of tech companies that were pre-public, and she basically got $50,000 worth of stock, which, um, at a lot of these companies, $50,000 worth of equity or $5,000 worth of equity when there's no revenue, and if you get in early enough, if you're probably, I would say, at a company like Facebook, if you were one of the first 4,000 employees, you probably got $50,000 worth of stock given to you. And it was probably I'll tell you, I started at Earthlink. I think I got $30,000 worth of stock given to me. It's just, hey, thank you for signing on. Thank you for coming and working. And I wasn't upper management. I was nobody. And the difference is Earthlink stock was falling. With Facebook stock, it's going to go up. So Sarah's role in getting to a million was, hey, I'm going to work at this company. I'm going to get some stock. I'm going to work there for 5 years and get vested. And when you get vested, it's normal 5-year vesting because they don't want you to leave. So she would work at these places for 5 years, get, say, $50,000. Well, if you 5x over 5 years, $1,000,000. Well, she wound up doing it, and they found 10 companies that were pre-public, where you could have started working. And Sean went over it, and yesterday they kind of went over it after a year. The majority of those had gone up, and remember that the market that we're in for the last year, the majority had gone up 5 times, 6 times in 1 year. In 1 year. That means say you started work in September of last year, and you had $50,000. You're not vested yet, so you have to stay there for 5 years. But if you got $50,000 and it went up 4 times, that $50,000 worth of stock today in 1 year is worth $200,000, and it will likely continue up. And they were talking about the company that I forget the company's name, but it's the company that Adobe just acquired, which is amazing. So it's just, again, I'm amazed at these guys. My First Millions podcast, it's phenomenal, and I'll do that as a YouTube exclusive. Lee Auto. It's the only one that I found. Oh God, look at all those reds. Oh God, ARKs are down 3%. Whew. Okay, let's start this podcast. This is going to be ugly. Record. Good morning. It is Friday. Friday, September 23rd. I was just telling a story on YouTube, which is a YouTube exclusive. I will not be telling the story here because I want more of you guys to watch YouTube. It is at the beginning of the live broadcast on today, Friday, September 23rd. So if you want to hear the story, it's an episode of My First Millions podcast, where they discuss, and it's of recent, how to become a millionaire as a regular, just Joe Schmo. Sam's wife, Sarah, and they call it Sarah's List. She has a Sarah's List of companies, and it's the way that she became a self-made millionaire. So it's a great story. It's how a lot of people become millionaires. It's a fantastic, fantastic focused idea of if you really want to become a millionaire, and you don't want to, you're not an entrepreneur. The risk taking is kind of outside of your realm. You want a regular job. This is the way to do it, and it's called Sarah's List. I told the story on YouTube. Tune into YouTube Live if you'd like to listen to it. Today, I'm doing the podcast at 10 o'clock East Coast time. It's 7 o'clock here on the West Coast. As you can hear from my voice, I'm exhausted. I've been in a shipping container ticket booth that has very little air conditioning at the Rose Bowl in California. So tomorrow is our last day, and I fly home Sunday. And I will be back online with my regular podcast on Monday. So I apologize for any of the quality issues that we've had this week. But I do not apologize for the market. The market is its own beast. Josh Brown was on halftime yesterday saying that he bought Netflix. He is probably the most like me of most of the traders, where he uses technicals and fundamentals. And he went over, hey, he's not going to time it. It's not going to be perfect. He just sees that this is a company that was trading 60 times earning, and it's now trading 20 times earnings. And he doesn't care that it was $600. He doesn't care that it is now $200. He doesn't believe that it's going to go back to $600. But he said, hey, this is a company that's been beaten down. They've got revenues. They're making money. They're going to launch an ad-based platform, which will bring in even more money, which will bring in even more subscribers. And he believes in the product. So, I think it's a great idea. I'm just not sure that I would necessarily buy into this one because my belief, Paramount, and which is the fastest growing streaming service, Disney, and HBO. Some of those may have better actual content, even though I haven't gotten rid of my my Netflix subscription. But he likes Netflix and VRQ. VRQ was a strange one for me. This is a real estate ETF. I think it was, Vanguard Real Estate. Let me see. Vanguard Real Estate. I think it was VRQ. I can't find it. It's not in. Let me see. Let me look at FinViz. VRQ. I was pretty sure that it was VRQ. Maybe not. VRE? Veris Real Estate Residential? No, I guess not. But he bought a Vanguard Real Estate, which to me seems kind of strange. But Netflix, I wanted to bring you guys that one because, again, he's a trader that I like. I think he's done really well. He was the one that brought in LNG to me at 150, which has since gone down a good amount. It's back at 156. You rode that one all the way up to, what was it, 180, 170, somewhere in it? Yeah, about 180. But that's a one that has just collapsed, completely collapsed. It's back at 156. If that gets under 150, I'm probably buying again, to be perfectly honest with you, because I liked it at 150. The 165 trade still hasn't gotten you out. You've lost money. But if you got in at 165 and didn't sell up here at 180, foolish, because it clearly had that button hook that I talked about going on. And this one was one that, remember, I said back in July, 128, probably should get in, and anything over, I even said during this capitulation period, it's at about 150, have at it. And it was a great trade. What's bringing the market down are bond yields, and you look at the two-year at 4.2, 4.4%, somewhere in that neighborhood. The 10-year is probably going above 4%. When that happens, equities just go down. I mean, it's simple as that. Use your inverse plays. DRV has been an absolute freaking monster. Your triple lever that we got a cross up here at 46, you're at 60 now. There's no kind of thought of turning around, but I will tell you, and I just wrote this note to myself, It is Friday. And guys, I don't know what this market is going to do, but if you've got profits in this market, even on these inverse ETFs, at some point in time, we absolutely will have a turnaround, meaning that we're going to bounce up. I don't know if that's the absolute bounce up, but we're crossing the June lows right now, which everybody agrees is kind of a platform. If you break those lows, who knows where we go? Do we go back down to March lows? Do we go back down to COVID lows? If you've got a recession, you just don't know. Goldman Sachs came out and said their target for the end of the year is 360. So if we look at SPY, that's 360 on SPY. That's 4% down from where we opened up today. That, by the way, for the S&P is at a 15 PE. There's been talk, and I know I've mentioned it before, that earnings estimates need to come down. And if they come down, then that PE will go up because 3,600 then represents 17 PE. It's just kind of math. But if earnings estimates come down, then that will go up. But right now, that's a 15 PE. That's the 3,600. We're at 18 right now. So again, it's a pretty good fall. I should mention this. This was my note, and I'm reading it, and I still can't believe it. There are some economists out there that think the Fed is going to send us into a recession. That's not news. The other news that I was reading that I can't believe is that they believe the S&P will hit 3150. That case is 17% from where we are now. That's kind of going back into, okay, I don't know that Josh Brown is correct in buying that stuff, because if we are sent into a recession and there are issues and we have 17% down continued, I don't know that I'm necessarily buying at 17% down. What I am doing, and what Zevin on YouTube just told me, GOOG, Apple, any of these names, and you can even look at Snowflake. You can look at Uber. You can look at some of those names that have held up, or that are companies that are making money. You're never going to time this, but this is long term. At this point, say you have $1,000 and you want to buy $1,000 worth of Google. I'd take $200 and buy it today. Buy it on the way down, because 5-10 years from now, I don't think you'll be upset when you buy this. Apple just dipped under 150. Do I think, my parents just bought a few shares at 155. They called me up while I was in the booth and they were like, it's at 150. I said, buy more. That 155 is nothing. I said, just keep adding to it, because again, Apple, by the way, Apple was announced that they are sponsoring the Super Bowl halftime show. They took it away from Pepsi. So I would completely expect another bounce from here. Costco. I had talked about Costco being, okay, they might beat and they might bounce up. It still was not good enough for this market. And this is a good example of what we're dealing with. Look at that. $3.17 per share to $4.20 per share. And you still have a complete downturn in this stock. There's nothing good enough for this market. The inverse is in play. So Alexis from Instagram told me, SOXS, I think I brought this up. Semiconductors, I think I brought this up before. It's been on a crazy run, this SOXS. And you need to watch this on YouTube to see this chart. 35.78. My eyes are crazy. That was back on August 8th. You dipped down below that, and it looked like a bad trade for a little while. But you've been soaring ever since. And look, that button hook right there, again, the algorithm perfectly timed this. This is great example of why I built the algorithm, not to get out at certain points when the MACD crosses down. Look at this MACD. See, if we just went by the MACD, you would have gotten out here, and you would have missed this second part of this run. But look at that first part of the run. Again, the algorithm is fantastic with something like this. This is a levered ETF on the semiconductors. And semiconductors have been dealing with inventory issues. And the performance chart on the algorithm, just so you're aware, it loses you 18.29%. If you bought and held this ETF, it loses you 86%. So the algorithm loses you less money. And some of these are few and far between. The average win on this is 23%. So Alexis, great find on this. Fantastic find. If you're in it, I think it's got all the confirmation in the world. Again, it's Friday. So be very careful because this has run all the way from 35 to almost 70. It's at 65 right now. That's one to be extremely careful of. I brought this up a couple of days ago because it did have a cross up. And again, the algorithm is strictly chart based. It doesn't base anything on news or anything of that sort. But Robinhood announced today, and I don't know how they're doing this, but they are going to pay you 3%, and it's if you're a Robinhood Gold member. Take a look at Robinhood's press release and stuff. I still don't understand it completely. But they're basically paying you 3% on any cash that's not invested. So say you've got, $5,000 and you've got it in a bank account and you're a Robinhood Gold trader. That bank account is probably paying you somewhere in the neighborhood of 0.01%, 0.1%. Because banks are typically stingy in paying interest on savings. They don't move it much. Even though the Fed's rate moves up, the interest rate doesn't move up. 3% is close to what you're getting having your money sit in a 2-year bond tied up from the Fed. Now, the Fed bond, completely safe. Your money in Robinhood takes like 4 weeks to get out of. Robinhood is not have the greatest of customer service. I've heard horror stories about it, but 3%. If there are a bunch of millennials who are going to sign up for Robinhood, and Vlad was on CNBC this morning saying it's even safer than a traditional bank because you're FDIC insured for $250,000, not the regular. I think it's $100,000 or $150,000. So it's an interesting thing, but Robinhood got you in at 951, got you out. It's still on the slide, so I wouldn't get you into this one. But with them paying 3% interest, it's an interesting one because there's talk of Robinhood being taken over, and I want to say that it's not likely, but with this, he may actually start to see an increase in his customer base again. So it's an interesting one. The only cross up that I had today was Li Auto. This is a Chinese auto company. I think it came up on the NASDAQ 100. The chart is ugly. The algorithm makes you 50%, whereas buying and holding makes you 54%. Your average win is 26.49%. But you don't win much. I gotta open this one up a little bit to see the full amount of wins. 31% are wins. Your position are 29. You have 29 positions total. 31% of those are wins. So it's again the algorithm that I built kind of gets you in that. You're trading under the 200-day. Chinese stocks have just not been in favor. This one, $20, about around $24 is where the algorithm, the cross up happens. It's a secondary cross up from the first cross up that happened back here at 25.55. It got you out on the next candle. So this is right around 24.74. It'll probably give me the exact amount later today, but it did have a cross up. That is literally the only one that I found. The market is just ugly. Use your inverse if you want to trade. SPXU, it's on a run, still has confirmation. Again, if you're in this one, stay in it. I don't think it's in danger of anything going away with today, unless we have some type of rally in the afternoon, which could happen. But SPXU is a triple inverse on the S&P. There is SQQQ, which I saw was way up today. Again, this has confirmation. I don't know that I'd necessarily get in today, but if you're in it, I'd probably hold it because there is confirmation above that 9 and 21. I don't think that you're coming down. And SARK, which is the inverse of the ARCs. This isn't levered. This isn't anything. It's just when ARCs go down, this goes up. You had a buy, and I mentioned this the other day. It was September 20th, so I think it was Tuesday, at 56.20. It's at 62 right now. It's a fantastic return on a single non-levered stock. That's unbelievable. UVIXI, the VIX, I believe, is at 27 or 28. We talked about the VIX being at 21. UVIXI's trading at 11. When it was under 10, I said, hey, buy it under 10. It had this cross up at 1041 right here. But it went all the way down to 9 something, I think, in the recent days. It's at 11. I mean, again, you've got a crazy good opportunity in that one. Do I buy it today? No. Do not buy this one today at 11.40. It could easily be $10 on Monday if you have a rally. So don't hold it over the weekend. If you're currently holding UVIXI, I'd probably hold on to it. But remember, take your profits, because in this market, it's a super, super volatile market. And I don't care whether you're playing the inverse, whether you're playing the long game, whether you're doing whatever you need to do. Before you get into a trade, you identify it. And with these inverse ETFs, with any of these things, energy's down, by the way. I saw Oxy. I'm sorry, it was Oxy. Oxy's under 60, I think, again. Remember, Warren Buffett is putting tremendous, more money than any of us all pulled together will ever have in our lifetime. And he's putting more of that into Oxy. And look at Oxy. And the reason is demand destruction. So my belief in this one, you could buy it because they're going to return the capital dollars to the shareholders. Oil is below 80. So buy this one under 60. Devon Energy, same thing. You've got, and while you're waiting, you're getting a 7% dividend on Devon. I think it's what's Oxy's dividend? Let's take a look at FinViz. Oxy. And by the way, I will, when I get back to Atlanta, I'll start using Active Trader Pro for a lot of this as well. Oxy's dividend 0.84, so it's not a huge dividend, but they could announce a special dividend because they've been making so much cash. It's up 113% the year to date, but I do expect this one back over 60. You can clearly see that level right there at 54. If you want to hold on to 54, that's been kind of where the support is all the way from March. This is just this year on a daily basis. So you can see the double top happened, and what happens with a double top is you pull back. It's providing resistance right there at 75. If it ever breaks that 75, that kind of line right there, we're off to the races. But this bottom line right here, you can see there's double bottoms. That's kind of the support right there at 54. Buy more at 54. It's going to crash, and the reason is demand destruction. Devon's probably the same thing. Let's look at Devon chart. Again, this is just it's the recession fears. Yeah, look at Devon. They've quite a few different. Looks a little bit different, but it's down. It's down below 60 again. It's crazy good buy. I don't think I've sold mine, by the way. Shame on me. All of this happens when I actually go to work. I should be trading. But I've been in that at Devon. I've been selling every now and then. This one's up year to date 46%. You get a 7.38% dividend. FANG, same kind of thing. You get a huge dividend. And sometimes you want to hold on to these just for the dividend because, again, if you're buying something like Google, something like Amazon, they don't give you a dividend. The money that you make is simply from capital appreciation, the price of that stock. But you can see right here, there is a support level here at 119, and we've broken that one. So my guess is that this trend line that they've drawn right here is probably your next support. If this dips under 100, buy into it all day long. This one has a 2.37% dividend. So again, sorry I don't have better news for you. Sorry I don't have better plays for you. BITI, I think is the BITI is the Bitcoin short, and I still have to do something with that one. But I wouldn't necessarily buy into this market. J&J, we talked about that one, had a crossover. It was funny. It came up on this morning. I was watching CNBC, and they were going over the laggards. This one's up today, and it was a laggard. But it's at 167. So if you got in there at 166.79, it's going to capitulate. But we talked about this one trading between 160 and 180. And it just doesn't go anywhere, but it pays a good dividend. United Health, if we're going into a recession, healthcare is a great place to hide your money. Tom brought up, by the way, if you guys want to look at it, let me look at what he wrote to me this morning about gold. And I want to bring up the fund that he mentioned, and I'll look it up. Let's see. Oh God, my internet is so slow. UUP, DUST. Should look up UUP. UUP is the Direct Sun Daily Gold Miners Index Bear 2x share. So this is a bear 2 times. 28 was the buy-in. Looks like it's up near 30. So you got your 10% on that one. Let's see. Fade U.S. Treasuries. Yeah. There's some, if you want to see it, you can go look at my Twitter. But he's got a couple of funds there that he likes kind of for slow stuff. Looks like TBT Treasury. I think we've brought that one up before. I think I got that from someone on Instagram as well. But you can see it's on a run. Really good run. From the buy-in was right here at about 23.77 somewhere. You're 30 right now. Fantastic U.S. Treasury. So it's going to continue on these runs. Be careful. Take your profits when you can. That's the best advice I can tell you. If you want long-term, like Zephyr. Zephyr bought long-term into GOOG. Let's look at Boyle. Let me see. Let's see. I know I said I would look at chat when I was on YouTube Live. So yeah, I would recommend buying long-term, Isaiah. You can't time the market. You absolutely won't. Zephyr wants me to look at Boyle. Can you look at Boyle? Let's look at Boyle. Boyle's an interesting one because I still say natural gas it's a commodity. And when you go into recessions, what I've learned over the years, and I'm not an economist, I know a few, and they've confirmed this, when you go into a recession or when there's even a fear of recession, commodities wind up going down. It doesn't matter that supply is going to under-deliver on demand. That doesn't matter. It will just go down on the fears of recession. And I know I brought that up before. Oil is a commodity. Natural gas is a commodity. Minerals and mining, commodities. All of those things, copper, commodity. So when you look at these things like oil, when you get the fear of recession, take a look. That's sliding. So when you get the fears of recession, rather than trading oil, you trade KOLD. And it's the inverse of oil. And you'll see this one went for a run. My problem is, and it's probably more psychology than anything, but look, 1383, and you're trading at 1563. So you've gotten your 10%. In this one, you lose 94% on the algorithm. I'll bring this in a little bit more so you can see it a little bit better on YouTube. This is KOLD. That run is clear. Look at that. You made 10% on the last one, but it got you out. I would have gotten you out before that button hook kind of took you down. But this one, you got all the confirmation in the world. So Zephin, in my mind, if you want to day trade something, and with the fears of recession, I would say KOLD has all the confirmation in the world. The problem is you've gone on that 10% run already. So do you buy Boyle thinking that, hey, it's going to go up? No, you don't buy anything today. It's a Friday. If you want to day trade this, you go on 1 to 5 minute charts and you scalp it for 1, 2, 3, 4% at a time when you have confirmation over your moving averages. I've kind of gone over that in the past, but it's a day trading strategy, and you can look up Trader Charlie, when to buy and when to sell, and you can just use charts to do that. And it's a skill. Paper trade if you can. Use Thinkorswim has a paper trading. And what paper trading is you just test on real markets as it goes, your day trading strategies, but you're not using real money. Say you put $1,000 in for a trade, and it's just fake money. So you could put $100,000. You could be Warren Buffett and put $5 million on a trade and see what you would make. But again, it's live market, so it's not affecting the markets. If you were to actually do something like Warren Buffett and put a $5 million trade on any stock, that would move the market. And no brokerage would allow you to do that all in one lump sum. But, this is Boyle. So would I buy it down here? You can't time it. But look at that RSI. It's at 29. 29 is the RSI. And let's look at this, by the way. Let's look at SPY. I know I went over this yesterday. And this is why I won't buy anything, because we are so oversold right now. You're due for a bounce. The SPY, on a 4-hour chart, the RSI is at 26. The last time we saw this was way back in September when you had this move up. So at some point, I think you're going to see that bounce. Do I want to get caught into one of these inverse, 3 times inverse ones on a way back up and then never come back down here because we touched the June lows, and technically some of the algos are saying, hey, we touched the June lows, I'm going to start a buying spree? No, especially on a Friday. So, again, Zephin, just you're smart enough to be careful. You're buying long term. I think that's great. But Boyle is one that I think LNG and Boyle, the LNG Cheniere, I think that's a great one when it dips under 150. We'll look at LNG. And again, remember, when you're buying Boyle, you're buying into futures. You're not buying anything of value. So it's an ETF that trades on things that aren't of value. It just trades on the price of an actual asset. LNG, for instance, has a great dividend. It's a company that makes money, and they are somebody that will take cheap natural gas here and ship it overseas. Now, if for some reason Vladimir Putin comes to an agreement to stop the war, opens up Nord Stream, LNG gets killed. That stock just gets destroyed. So you have to know what you're buying. It's a key point. Understand what you're buying, when you're buying it, how you're buying it, what your losses are, and what your gains are before you buy that. If you're doing like Zephin and you're buying Google for 5-10 years, don't worry about it. Don't identify it. Just identify that you're buying it now and you're just going to hold it. 2 years, say 2 years from now, say for instance, you bought Microsoft in 2000. Let's look at Microsoft because I want to show you some of the things that can go wrong with a long-term purchase plan. Microsoft, we're going to turn off this strategy tester so I can, so you can see the full screen. And let me just make sure you can see that. You really can't see it. Let me turn on the strategy tester so you can see it. The bottom part of the screen just cuts out. But let's look at I'm going to pull up a monthly chart of Microsoft because this is a great example of what you look at. And I'm going to turn off, I'm going to expand this. I got to turn off a bunch of stuff. Earnings, strategy, I don't want dividend, I don't want splits. I'm going to turn off all that. And we're going to remove all annotations. I had identified something in Microsoft and it was annotating it. So take a look at this. Microsoft has been beaten down. It's at 239. I identified, I think, for a friend earlier, and that was part of those annotations. 235 in my mind is a floor. It could break that, and then we're off to the races down probably closer to 200. But say, for instance, in March, say January 2000, you bought Microsoft at 59. Okay? It took you all the way we're looking, we're still going. If you bought it at 59 and you held on to it that whole time, it took you until 2016 to get back to that, about July. So it took you 16 years to get back to it. Does that mean you don't hold on to it? I mean, again, if you're holding on to this and you've got reasons to hold on to it, you could probably use that capital to make money somewhere else. You're getting paid a dividend. You have to identify the ones that you want long term. This is what could happen to Apple. None of us are fortune tellers, so we don't know where Apple's going to go. But this could happen to Apple, where Microsoft was so dominant in 2000 with their operating system, with Microsoft Word and Excel and PowerPoint. They were so dominant, and yet they couldn't figure out how to make money and make Wall Street believe in them because they had a failed phone. They had just had so many failed services that they had tried to do, and Wall Street wasn't valuing them. Then when Satya Nadella comes in and the cloud starts taking off, look at that rise. And we're having a button hook here. And this is a monthly chart. So you're having a button hook. It's taking a break. I mean, it's clear to me that Microsoft is a great company. I think it went up to 300 at its highs. 335, 350. And that was just December of last year. But look at that slide in the RSI. Look at that MACD kind of come down. It's clear this one was way oversold. And now it's just coming down to reality. It hasn't changed the business fundamentals. They're still growing at the same pace, if not more. So understand what you're buying, understand where you're going, and get into that trade. So hopefully this explains everything. I am off to work. I will talk to you guys on Monday. Take care. For those of you who want to, again, check out the live broadcast for the YouTube exclusive of that My First Millions, How to Become a Millionaire kind of story. And if you want to tune in, I mean, the best place to actually watch it would be My First Millions if you listen to that podcast. But if you want to know the story, it's called Sarah's List. If you have any questions, hit me up on Twitter, hit me up on Instagram. I am promising to start the newsletter at some point in time, where I send out these charts to you guys every day with some annotations and things like that. So if you have any questions, hit me up. Have a great weekend, everybody, and let's just hope we have some type of rally this afternoon. I'm still seeing everything down. Google's under 100. Google is officially under 100. Load up. God, what is their PE? Let's see. GOOG. And I do this all the time. I kind of get distracted. This is what ADD actually looks like in real life. They're 30% down year to date. Their PE is 19. Forward PE is 17. This is a huge growth company, which has just come down into value territory. Because remember I told you the S&P traditionally trades at about 17, 18 times. Wow. So you're not getting a dividend, so you have to make your money. And again, remember that Microsoft chart. Could Google be this guy in 2000 and just kind of flounder around here? But identify your trades. It's your money. Make sure you're spending it wisely. Make sure you're making money with your money. Make sure you manage it. And if you don't want to manage it, VOO, Vanguard's overall stock market. They're low cost. Just go into Vanguard. And you'll do fine. Again, I think we're heading into a recession if we're not already in one. And this is just one. You can't time the market. It's time to buy. Remember Warren Buffett's be greedy when others are fearful. Be fearful when others are greedy. For the last couple of years, people have been greedy. So it's your time to be, and now they're fearful. It's your time to be greedy. Take care, everybody. See you. I'm saving this one. Okay, I'm going to YouTube now. So I can see you guys.